The Nasdaq hit yet again another fresh all-time high. Even though on Friday we had a sell-off, you can see all of those losses were completely erased and overtaken by the bulls here, a true sign of a strong bull market because of a little headline that came across the desk today. AMD, which is Advanced Micro Devices, they build all this sort of picks and shovels devices for this AI run. Same thing with NVIDIA, their competitors, signs an AI chip supply deal with OpenAI, which is the company behind ChatGPT, which gives it option to take a 10% stake. And just so you guys know, this represents a potential $100 billion in new revenue that is potentially coming AMD's way. And look at the bifurcation that we're seeing in the three main US stock indices. The S&P 500 is flat, the Nasdaq is up, and the Dow Jones is down. The main reason for this is the divergence because of the high concentration in semiconductors and AI stocks in the Nasdaq. The VanEck Semiconductor ETF SMH paints a good picture of what's going on. When we just look at semiconductors, Qualcomm, AMD, Taiwan Semi, NVIDIA, etc., these stocks are up tremendously. But when we look at some other areas of the market, it's not a perfect all green day today. You can actually see we have some divergence with semiconductors looking really strong today, but a lot of other areas in the red. And with such big announcements of huge spending in the AI world seemingly happening every day, it does seem like there is a strong tailwind behind the stock market at this time. And in my opinion, there's a good chance that if you do get dips in the stock market, big buyers will step up and buy that dip. In my opinion, a dip in the market is an opportunity to take advantage of in my own trading and my own portfolios. However, I do want to just reiterate what I have been saying on my channel. I'm not bearish on the stock market in any way, but I am cautious at these levels as I do think the market is primed for a little bit of a healthy breathe in, breathe out, or a pullback in this cycle. Stocks don't usually go up forever in one singular direction, and healthy pullbacks are a part of even the strongest bull markets. Just take a look at the S&P 500 in the 1990s, when the internet was exploding the valuations of companies all over the place. Even in this dramatic period of outperformance for the stock market, we still had healthy drops within. And I actually think that for the market to keep going, we want to see these healthy pullbacks. It gives people a chance to deploy new money and to reduce the leverage, right? What happens a lot of times in these pullbacks is people who are highly leveraged sort of get liquidated or get pulled out of the market, which is actually kind of healthy. We don't want to see tremendous amounts of leverage because that can lead us into super bubble territory. And that's ultimately what happened in the late 90s before you had a massive drawdown in tech stocks. So looking at the market today, we've had a pretty much one-shot move to the upside here since the April lows. And so I do think it is still prudent that a dip could take place, although I'm not looking to try and time that. I do think that that is ultimately an opportunity. And in the bigger picture, I'm still bullish and think we have time for this bull market to continue to play out. I'm by no means thinking that we're at the top of this market right now, but I do think that waiting for a pullback is the prudent and appropriate risk management thing to do. I've actually gotten a lot of criticism on my videos recently for being cautious. A lot of people sort of on the edge of a cliff like a penguin trying to push each other off. That's kind of what happens in bull markets is people are, they shame anyone who is cautious or bearish or concerned about market valuations. And that ultimately can turn really ugly when the market does reach its final topping point. But again, I want to reiterate, I don't think the market is at the top. I think we have more gains to be made in this AI trade, but I do also think that the appropriate thing to do to manage risk appropriately is to wait for pullbacks to get better prices and to manage risk more appropriately. If we were able to get a pullback to the 50% retracement, for example, I think we could actually map out a really healthy, risk to reward trade idea on the Nasdaq, or specifically individual stocks that might look a little bit more attractive than others, and waiting for these risk to reward opportunities that have a lot of upside with the ability to call or to close out, I think makes a lot of sense. Whereas if I took this trade up here and put my stop loss down here, right, I would be risking a lot more as opposed to if I were to wait for that dip. I could create this trade, which is a much better risk reward profile. That being said, we may not get the dips, and the market is very strong right now, especially with such exciting announcements hitting the market every day. Again, that can lead to just a tremendous amount of money pouring into markets. Take a look at the Nasdaq. On the daily chart here, we have completely recaptured captured the Friday sell-off, which just goes to show when you're in a bull market, even tiny pullbacks are getting bought aggressively. And so I do think that that nature of this market will maintain itself as long as it maintains itself. Let me explain what I mean by that. The biggest threat to this market is the market going down. And I know that's Captain Obvious, but there's a lot of hype and overconfidence in the markets that, again, sort of continuously causes it to go up. But once that confidence breaks, that is oftentimes the point where you do start to get a correction or pullback, is when confidence wavers a little bit. Right now, confidence is very high, and any shock to that could cause a pullback. And that's where, again, I think it shakes out the weak hands is essentially what I'm saying. And I think that waiting for those dips creates a nice risk to reward profile in what I believe is still a strong tailwind in the AI trade. Another trade idea that I've been talking about recently is the US dollar. And although we did get an initial really nice, strong out of the gate move here this week, we have seen the dollar dwindle a little bit, but still holding strong onto this supportive area. We've talked about this a lot on the channel here recently, but I do still think that there is upside for the dollar in the short run, which may also be a catalyst, by the way, for a little bit of a pullback in stocks. The Edge Finder is giving us a couple strong readings for the dollar, specifically dollar Swiss, dollar CAD, and the Kiwi dollar getting a short setup. All of these ideas basically surround the idea that macro looks pretty strong for the US dollar when compared to some of its peers. Here's a look at the US economic heat map, which gives us an idea of what the US macroeconomic data is looking like. What we see here is that GDP growth is still very strong at 3.8% for the second quarter this year. We also saw manufacturing PMIs slightly tick higher than expected, although services PMIs were a bit of a miss. Retail sales came in strong, and then we also have consumer price index numbers coming in at 2.9%. This is still a little bit sticky, which is another reason I think that the dollar may remain strong, is a high CPI print still above their target of 2% could keep the Fed from cutting interest rates too many more times. Although we've still got a big question mark when it comes to the NFP report, which we missed last week due to the government shutdown. And if the government shutdown persists, we will miss next week's CPI and PPI numbers, which are expected to come out. There's a big question mark on this, as it greatly depends on what happens in Capitol Hill when it comes to the government shutdown. But given the current environment with the data that we do have, the general outlook for me when it comes to the US dollar is a 56% reading. Now you might say that's not a super strong reading, but it matters when it comes to currencies, how it compares to other currencies. I'll talk about that just a second, but before I leave this page, also just a note that the US stock market macro outlook is still looking quite strong. Another reason why I will not short the market, but rather just wait for pullbacks. The economic surprise meter shows how each currency is performing relative to expectations. What I mean by that is that for all of these countries and their respective economic data points like CPI, NFP, all these sorts of events, there's forecasts. And what the economic surprise meter essentially does is it compares how the data is coming out relative to what those forecasts were. And when we look across the lexicon of currencies, what we can see here is that the US dollar is actually putting in some relatively strong numbers. So GDP growth, for example, coming in strong. What we see is a stronger weighting in the US dollar than its peers. We see things like the Japanese yen selling off here over the weekend due to some data that I'll show you in just a second, or some news that came out. And of course, also we see other pound, British pound, euro, the Australian dollar, Canadian dollar, Kiwi dollar, these are all getting pretty soft readings relative to their expectations. So dollar still remains on top when it comes to the currency world. And I've been playing the dollar in two primary ways. The first is through the ETF UUP, which is a dollar index bullish fund. I have 5,000 shares, and although it was up about 1,000 at one point, we've given a little bit back here this morning. And this fund essentially follows the course of the US dollar index, DXY, which many traders are familiar with. UUP is a low-cost way for me to play the US dollar against essentially a basket of other currencies. But the other way I've played it is long dollar yen, which I closed out of for a profit on the Sunday market open. Here's a look at the signal that was sent out in our Discord room, where I took a first trade and then a second trade. And again, when the stock market, or when the financial markets opened up, I ended up closing out of my dollar yen longs for a total profit of 369 pips. If you're interested in getting notified whenever I take a trade, you can do so by joining the VIP group, which will be linked in the description down below. Or if you just want to explore the website and details about the VIP group, you can do so by scanning the QR code on your screen right now, or like I said, if it's easier, in the description. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. And I think from a technical basis, the dollar index is in the process of potentially basing out. We've had this downward trend for most of 2025. We've now kind of gone sideways, and I think we have the potential with some of the macro data that has come in better than expected to start actually breaking to the upside. I think a short-term target for me, meaning the next few weeks, is a move back up to 100 on the DXY. And if we can break through that 100, then I do think that the next level would be a push up to 101.50, let's call it, at this prior high. Again, the supportive reasoning that I would give for why I think the dollar has upside is because the macro data makes it look favorable relative to its peers. And this relative outperformance is why the Edge Finder is spotting, if we actually just go just major currency pairs, these setups. You can see that the economic data is what is really boosting the score for USD within the Edge Finder's scoring matrix and output summary on the top setups page. Let's take a look at each one of these setups to see if there's anything of substance. First, taking a look at dollar CAD. So dollar CAD actually looks like it has formed a low. You can see we had a triple bottom here and then another triple bottom and then a breakout to the upside. So if we do get a pullback into this area around the 138.50 level, I do think there is upside for the dollar CAD to continue, assuming that the macro stays relatively similar to how it is now. Our second setup would be taking a look at USD CHF. And while this currency pays a positive swap to hold over time due to the carry trade, I don't love the technical aspects of this chart. The Swiss franc still looks really strong, and what I would be looking for would actually be a break and decisive closure above the 8100 level before looking for potential long and a bigger term, bigger picture reversal on the dollar Swiss franc. Our third dollar setup is going to be NZD USD. And this one is actually possibly the closest to a possible entry for me. Take a look at the way that we are pulling back up into this key level of resistance, which lines up nicely with the 38.2% retracement level. I think this could potentially be a trading setup for me, and if I take that trade, I'll share it inside of our Discord with full details and updates. I know a lot of people who watch my channel are very interested in precious metals, but currently my reading on gold and silver is very neutral. When it comes to copper, also getting a neutral, and platinum is getting a bullish rating. The top setup simple page looks at sentiment data, technical data, and economic data to build a bias around a particular symbol. And in this case, with gold at all-time highs or just shy of it, you can see making another all-time high today. I just don't have the interest in chasing this thing. I do still think that on a big term picture, gold has more upside, and I am definitely not trying to call the top or say that this market is going to crash, because again, people who have been trying to call that have been on the wrong side of what has been a phenomenal uptrend this year for precious metals. Though for me to get involved, it would have to pull back and the macro would have to look a little bit more favorable towards bearishness in the US dollar. But right now, with my bullish bias in the dollar, I'm more interested in trading the dollar long than I am trading gold and silver. And in case you haven't joined already, we're doing a free giveaway for the Edge Finder. It's free to join, and we're actually giving away 3 copies this week of the tool. If you'd like some information on how you can join, check this out. The steps to join are very simple. Step 1 is to join the Telegram channel, which is linked in the description down below this video. Step 2 is to simply join the giveaway by entering your name in this form here. Again, if you'd like to join, simply join the Telegram channel using the link in the description down below, or scan the QR code that you see on your screen right now and simply enter your name in that form inside the Telegram. Like I said, we will be giving away 3 copies of the Edge Finder to 3 lucky winners, so enter for a chance to win for free down below. And the chart of the day definitely has to be this move in the Japanese yen. Very, very bearish move. And the reason for this move was what happened over the weekend. Dollar yen gaps 1.56% as Dovish Prime Minister, I can't say her name, wins the election. Fiscal Dove, which is of course why the yen is weak, Sanae Takaishi, I'm hoping I said that correctly, has been elected Japan's next prime minister, sending the yen sharply lower. The Takaishi trade, not sure how to say it, long equities, short yen is in full effect as the markets price in more stimulus and looser policy. Definitely a surprise to the norm that we've been expecting with the Japanese yen, which is higher interest rates for Japan. So again, the Japanese yen is weak against other currencies as we see euro yen, pound yen, CAD yen all breaking higher, but equally interesting, take a look at the Japanese stock market, up 5.3% in response to what we see happening there. And just for full reference, the market sell-off that we saw in April sent the Japanese stock market down substantially, just like it did in August of 2024, but this was for a different reason. This was the whole, central bank carry trade unwind stuff that went on. And then this year with the April sell-off, just look how much we've rallied since those lows. 60% almost in the Japanese stock market from those lows is an incredible rally. So a lot of bullishness following that April sell-off. The markets panicked and a lot of people got super short the market or took all their money out of the stock market, and it was perfectly at the wrong time for stocks to actually turn around and have record-breaking breakouts to the upside across many indices, which are setting fresh all-time highs this year, it seems like every single day. The simple lesson that I think 2025 is teaching a lot of people is the trend is your friend, and fighting it is like trying to break up with somebody who just refuses to break up with you. It's a messy thing, right? Trying to fight upward trends, whether it be NASDAQ, gold, the Japanese stock market, momentum is a real thing in markets. And unfortunately, a lot of people learn this lesson the hard way, trying to bet against rallies or try and fade or call the top, which is just a dangerous game to play. Again, the trend is your friend. It's a simple concept, simple mantra, but in my view, my experience, the strongest thing to do is to look for macro to align with momentum and to trade in that direction. I've attempted to automate that process with our tools. The Edge Finder essentially looks at macro, technical, which is momentum, and sentiment, which is market sentiment, essentially commitment of traders data, etc., which by the way was delayed due to the government shutdown. But it looks at all this stuff and helps us to better spot potential opportunities in markets. Even though we get something like a bullish NASDAQ rating, what I want to do is still constructively wait for pullbacks to maximize my potential risk to reward. Hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.